Da 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 da. Here we have the current stock market update for GameStop Corporation, stock ticker GME. Before we begin, if you find this educational material to be helpful in your trading, please remember to click the like and subscribe buttons and leave your thoughts below in the comments section so that other traders can find this information more easily on the platform. So as we can see here, we have the 1 hour price chart. Each candle on this time frame represents a 1 hour trading period. And as we can see here to start the week, we are seeing some continuation here based off of the prior upward movements, bullish price movements that we're seeing into the Friday close. So there are a few different reasons to be encouraged by what we're seeing at the moment. And we will point to those aspects in this video. We will explain each price level in this video. So currently, what we're looking at here, is really a price rally that began coming in right around 1943. We did see a fairly strong bounce from this area as share prices moved back into the exponential moving average cluster. We really didn't see a retest of the prior support zone, which came in at $19.31. So the fact that the stock was able to find a footing in advance of this level is encouraging on its own because you didn't even exactly retest the prior support level before you started to see share prices move higher. So that on its own is a little bit of a positive. But even more of a positive here would be this increase in trading volume that you're starting to see at the moment. If I was along this stock, I would be much more encouraged by this, possibly than anything else, because what you're seeing here with these trend movements higher, is a clear, gain in the overall trading volume bars that are being seen for this ticker. So at the moment, this is a positive development because what this has really created here, is a price trend that has now moved above the entire exponential moving average. So even this 200-hour EMA, this blue line here, has now been overcome. At some point, we have to start to expect to see a bit of a pullback here, a bit of a retracement. So identifying potential areas where that could occur could become a bit more challenging because share prices themselves are now moving into overbought territory at the moment. So as we can see, share prices are currently trading right around 22.30, and this really puts us less than $1 away from the bottom of the price gap that we have been watching for this stock. So if we remember, this share price gap was originally formed as a market reaction. The market had a negative reaction to the most recent quarterly earnings report. And this did create a lot of near-term volatility for the stock that did break those prior $19.88 lows. So, if the real question here is, how many of these orders are still open? How much market activity, has held in place uh, from this prior price gap. So, if we're looking at the trading volume figures themselves, I would say that a fair number of these orders have remained open, which is a bit surprising because what we're talking about here is a share price gap that developed on the 11th of September. So, we're talking about almost 2 full weeks at this point. We're getting onto the 2 week mark here. And presumably some of those orders would have been closed automatically with a weekly expiration. Now, of course, that's not going to be every order. Not every order has a has an automatic close. Some orders are closed have to be closed manually. And then, in addition to that, other trades that are open with automatic closing periods, have longer periods of time. So this could be like a monthly close, for example. So, as things currently stand here, the way that this trading volume bar development is starting to unfold here, this does make me think that a fair number of orders have actually remained in place within this price gap. So that is encouraging because if this does continue, you could quite feasibly see a test of the top of this price gap, which comes in currently right around 23.20, would roughly be the bottom of that area there. So that is the next major level to watch to the top side. If we were going to start to see some movements lower, I would probably want to go into a lower time frame here to really make that assessment. But we could start to look at some Fibonacci retracement zones currently to try to figure out exactly where share prices will start to see support. One level that I would be watching does come in right around this 23.6% Fibonacci retracement because we could be in a position where this 200-hour EMA starts to move into this red zone here. So if that does occur, I mean, where previously this blue line was descending, but now we're sort of flatlining and possibly ready to start moving higher. So, if this blue line does sort of cross into this red zone here, this would then create a fairly strong level of support that could help share prices sort of maintain these upper levels here. Currently, this would come in right around 2180. So that would be the first level of support that I would be watching here. From there to the downside, the picture becomes a bit more cloudy because we're not really seeing moving averages line up very well with these Fibonacci retracement zones. The first level that I would probably be looking at comes in right around 2140, which would be the 38.2% Fibonacci retracement. And then if that level did break, you could start to see a deeper decline at that point. From there, I would probably start to target roughly 2060 as the next level to the downside. So, of course, we're not quite there yet. We do need to sort of focus on these two areas at the moment. So, to the top side, I would be looking at 2320 to see exactly what occurs there. You could start to see share prices move into that area, successfully fill the price gap, which would be good news. Somewhat surprising good news, but it would definitely be a positive development. And then if you do start to see share prices fail there, it wouldn't be completely surprising because it's an old support zone that would now be expected to work as resistance. So this 2320 area is fairly important here. It does sort of define the upward potential and the possible resistance zone at the same time. I would say that the most bullish scenario that you would see at that point would then be a break above that 2320 area, because then you should have a fairly clear ride back up to $25. So that would be good news for the stock. However, if you do see sharp prices break below this 2180 area, at the very least, you have to start looking at 2140. And then if you see a break below there, then you're probably looking at a further decline back into roughly 2060. So even if all of that were to occur to the downside, that would still suggest that this $20 handle would remain intact. So overall, this upward price movement here has been encouraging, and it does suggest that there is some buying activity here. So here's the current stock market update for GameStop Corporation, stock ticker GME. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market, lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.